Hello and welcome. You're tuned into MF Corner and I'm Sonal Bhutra. Well, investors, they've been looking at diversification via international funds in their portfolio and global investing that is undergoing transformation with the rise of outbound funds from the gift city. So how does one invest in international funds via gift city? Are there any tax benefits? What about costs? Will AMCs look at introducing more products here? So many questions to be answered, right? We already have some funds and some AMCs which have introduced some funds in the gift city itself. Those names will come up for you on the screen as well. The Tata India Dynamic Equity Fund, Edelweiss India Multi-Manager, DSP Global Equity. You have Mirae Asset Global Allocation and Ashoka WhiteOak India Multi-Cap Gift City Fund as well. So let's understand on this show what kind of opportunities you have via gift city when it comes to mutual fund investing. And let's welcome Aashish Somaiyaa, who is the CEO at WhiteOak Capital AMC, and Kalpen, Parekh, MD and CEO, DSP Mutual Fund as well, will be joining it in just a bit. Ashish, good afternoon. Thank you so much for joining in. Well, there have been a lot of questions that we have from investors as well. So for a retail investor who wants exposure to international markets, say US tech or China consumption, how does gift city make it easier compared to traditional overseas feeder funds?
Yes, Sonal, thank you and compliments to you for taking this up. It's an area of increasing interest in the current times. Now, as you may be aware, right from mid 2000s, maybe more like 2007, 2008, we had the ability to file feeder funds with SEBI as a regulator, and then those are obviously local mutual funds, but those local mutual funds were working as feeder funds and investing into some of the examples that you gave. Like, for example, in my previous role when I was working at Motilal Oswal, we created, say NASDAQ 100, S&P 500, a lot of these kind of products which were feeder funds in India, but then they were investing into funds abroad and helping investors get international exposure. But as you may be aware, and as some of our viewers may be aware, the Reserve Bank of India had imposed a limit on the domestic mutual fund industry, that as an industry, as an aggregate, we couldn't invest more than $7 billion. And currently, obviously, this limit is full. So there are no domestic feeders that are available for investing outside the country. With this scenario in mind, obviously, the second option is the liberalized remittance scheme, whereby for every individual PAN, there is an annual limit of $250,000 or $250,000. So call it more like 2 to 2.25 crores per PAN, which you are allowed to invest abroad under the liberalized remittance scheme. And with this now, you dovetail or combine the gift city vehicle or the gift city funds that are available. So under LRS, you can send money to a gift city fund. And in gift city, like you already named, there are other managers, including ourselves. We enable people to invest into, say, other emerging markets. Like obviously India is an emerging market, same way you could diversify your exposure into other emerging markets, or you could invest into, like you rightly pointed out, some other AMCs may offer exposure to US tech or to the Chinese market, or, like I said, emerging markets, etc. So given that domestic feeder funds have a capacity constraint right now, I think, remitting under LRS and investing via gift city is, equally good option.
All right, take that point, and thank you for explaining that to us in such an easy manner. So in that case, is there a minimum investment size for international funds via gift city? And is this really accessible for retail investors the way feeder funds were?
Yes, it is, Sonal. So, there are, like you mentioned, my friend, Kalpen is joining in. DSP recently launched a fund where the minimum is for retail investors $5,000. At this juncture, someone like us, we run alternate investment funds, where for us it is currently $150,000, but that is more because it's an AIF, which is for accredited investors, and accredited investors can put something like $10,000. And of course, going forward, we ourselves will be also creating retail funds as we go along. So the point is simple that, if you're a retail investor, it's $5,000. Of course, it's not as little as 100, 200, 500 rupees, which were used in the domestic market. For investing abroad, the minimums are slightly higher, but $5,000 would be more like, say, 4.5 lakh rupees, which is higher than the normal, but clearly not out of reach for a lot of people.
So is it fair to say that it'll take some time for, people to move to such funds versus feeder funds? I know there are limit issues right now that we are seeing, but once that opens up, in such funds, there's no limit as such, right? But with Gift City funds, there will be limits. So it'll take some time for retail investors to move to Gift City in that case.
Yeah, I think it's more a familiarization, like, what is the liberalized remittance scheme? How does it work? How do you actually remit money? What is the process? I mean, most people, say you have an account in any of the banks here, you are used to making payments to each other, etc. But when you make an LRS, what type of application you need to make to the bank? How does the bank remit money from an Indian account? Because Gift City, mind you, is actually an offshore center. It's not technically, when you talk Gift City, you are not in India. Geographically, you are in India, but from a regulatory perspective, it's an offshore center, which means that you are sending money from your Indian account in US dollars into the funds account, which is in Gift City. So the LRS process for remitting money is a bit different. It needs some documentation with the bank. Other thing we must not forget is that for LRS, there is a tax collected at source, which is about 20%. Yeah. And that tax collected at source is obviously going to be refunded when you file your taxes for the year. It's like, some advance tax you have paid. So either it will be set off against the future TDS, or it will be reclaimed when you file your taxes annually. So the tax collected at source and the procedure with the bank, that's a bit different, but otherwise it's not onerous at all. I mean, people will get used to it eventually.
Okay, all right. So we'll watch out for that. Kalpen is also with us now. Kalpen, thank you so much for joining in. Aashish was just talking to us about how the limits are a little higher, how it is different from normal feeder funds. But just wanted your take as well for a retail investor who wants exposure to international markets. Do you think Gift City makes it easier compared to traditional overseas feeder funds? And what kind of costs are you seeing? Are expenses different compared to feeder funds here?
Yeah, if Ashish has answered so many things, I don't have anything new to say. Having said that, see, Gift City, the LRS funds, what we have done is we have kept the cost structures as competitive as Indian mutual funds here. Because I believe that in the last 5-10 years, SEBI has done an amazing job to make cost structures extremely transparent and conducive for market returns to meaningfully reflect in investors' returns. So we don't want to increase the cost structure, because ultimately the final return of the investor is the market return minus the fees. And our cost structure for the retail outbound fund that they've launched for the direct plan investor is 100 basis point, and for the regular plan investor is 1.75, and that's slightly lesser than an actively managed mutual fund here in India. So our cost structures are reasonably similar to competitive, is all I would say. Another point is, see, we are all very much used to investing in onshore mutual funds, whether they are investing in Indian stocks or global stocks or a mixture of Indian and global. We can press 3 buttons on our mobile apps and do the entire transaction journey seamlessly. Because the Gift City platform is a new platform and our fund is the first retail fund, we are also discovering every day newer operational processes as well as sometimes challenges. So there is a huge learning curve right now that we are also going through in terms of seamless customer experience. And hopefully over the next 3 to 6 months, all of this will be sorted.
Yes, that was exactly the point of having this conversation on the show as well, Aashish and Kalpen. Wanted to understand, this, of course, is a way of investing into global funds or global stocks. But if costs are similar, if we are seeing no cost advantage, so to say, in the Gift City side, it is similar right now. The limits are a little higher. Do you think it will be easier for retail investors to move quickly? But as you're saying, there's a learning curve that we are seeing here already. Ashish, coming to you, do you think there's any taxation benefit that Gift City international funds will see? Is there any simplification, capital gains, dividends, or even double taxation treaties which will come into play for an Indian investor?
So look, Sonal, I think Gift City is massively advantageous when you are bringing money into the country. So let us say that, for a moment, because you know that there are not just international funds which are investing outside, which all of us have created, like I said, emerging market fund, but we also have funds for bringing money from outside the country into India. Well, I know that's not the main topic today, but Gift City is most advantageous for inbound investing because it is completely tax-free, right? When you see, as an NRI, if you're investing in India from your NRE account, then when there is a withdrawal, there'll be a TDS, there'll be capital gains. You need to have a PAN and file taxes here. All of that is required. But when an NRI invests through Gift City, what happens is that the Gift City fund is buying an Indian fund. When the fund processes a redemption, because it is coming from Gift City, we don't they don't have to pay any taxes in the Indian market. And let's say if the NRI is investing from a jurisdiction like, say, Dubai or Singapore, where there are anyway no capital gains taxes, then for NRIs, clearly investing into India via GIFT City is much more advantageous than investing in India through a NRE account. But let's talk the reverse. When Indians are investing abroad through GIFT City, there's no tax advantage, so to speak. It's treated like any other international investment. So if you withdraw in less than 2 years, it is taxed at the marginal rate of tax. If you hold for 2 years and then you withdraw, then it is treated as long term. It's 12.5% plus surcharges.
Take that point. So largely similar is here as well. So Kalpen, costs are almost similar, taxation is almost similar. So why do you think one would go the GIFT City way to take that international exposure? I know you're saying there's still some time, doing it the normal or the regular way is just like a swipe away. Something that you can talk about on this as well. Why would some go to the GIFT City way?
So I'll tell you why would I go, and each investor has to take his choice. And you probably don't ask this question when a new NFO is launched in India, where we are 25.
No, we do actually. Why should one go for the NFO? We already have that category in the market.
And the question, and I'm glad you're doing that. So I'll tell you, for all of us have, grown our capital, our wealth, investing in Indian stocks, since 95, almost 30 years. And that has worked well for us. Indian markets have got, reasonably fully discovered and reasonably fairly priced and valued as well. What happens is that a lot of dominant profit pools of the world and very dominant businesses also exist in different parts of the world. There are a lot of businesses which are not present in India. And their profit pools are sometimes not correlated to the profit pools of the sectors in India. So India is largely banks, tech stocks, consumer companies, energy companies. There are many business models which are not present in India, which are very complementary in the way they have their economic cycle. And many times India is attractive. Many times some of these global stocks are very attractive. So today, for example, the hype is tech companies and AI stocks. They were all at 10 to 15 times to earnings 2 or 3 years back. It is unfortunately, the romance of last 1 year's high returns of global investing, which is what people are getting excited about. But I'm saying investing globally should not be about last 1 year or next 1 year return. It is about fundamentally saying that I'm getting world-class business models also. And if I want to be a more holistic, balanced investor for the next 20, 30 years for myself or my family, I want to build a broad-based portfolio. The best way to do that is to invest in a fund in India which has Indian and global stocks together. That's my first preference, and that is what I do. Even though we have launched the GIFT City Fund, I'm clarifying that. The second best way to increase your exposure of global stocks into your portfolio, in today's context, there are limits on what Indian mutual funds can do in terms of incremental exposure to global stocks. Many funds don't have those limits. So the second best option is the LRS window, which the RBI has given, the liberalized remittance scheme, up to $2.5 lakh annually per person, per PAN card. So I would like to take advantage of that because let's say my son is today in the second year engineering and 3 years, 5 years later, he will go out to study. I want to create that kitty for him through the LRS route. Instead of letting that money lie idle in a bank account outside India or giving that money to some global fund manager, I rather, manufacture that global investing practice through Indian fund managers on the GIFT City platform. The revenues remain in India. The profit pools are ours. I feel good that my company is earning those profits versus, a global company earning those profits. So with that thought, we have put this in place. It will be a cycle. Like there are periods when Indian stocks are attractive. There are periods when global stocks are attractive. If you have balance of both, your investing journey is far more resilient and not at the mercy of one market cycle.
Okay, we take that point. A lot more questions lined up ahead, but we have to take a quick break and we'll continue this conversation on the other side of the break. Welcome back. You're still tuned into MF Corner. We're discussing everything about investing via GIFT City. Aashish, let me start with you. What are some risks which are unique to GIFT City structures?
No, I don't think that there are any risks which are unique to the structure itself. In fact, I would say that if you did not have GIFT City as a jurisdiction and the limits on the domestic feeders prevailed, then any which way, you would try to venture out and invest to LRS into Singapore or Mauritius or Luxembourg or Dublin or wherever. So from that perspective, I think having an Indian offshore center in GIFT City is a much preferred option. So I don't see any risks with it. The risks are all related to investing, right? I mean, you're investing in US tech or you're investing in other emerging markets. So investing risks aside, I don't see very many risks. The other thing, of course, you should keep in mind taxation. Because when you're in, like I clarified earlier, GIFT City is not tax advantaged if you're investing outside India. But if you're bringing money inside India, then obviously there are tax advantages. And when you're investing outside India, what type of holding period? I mean, like if you hold less than 2 years, then obviously there is a very high tax, which is, your marginal rate of taxation. So I think that is something that people need to be mindful about, but no specific risks.
Got that point. Kalpen, quickly, if you can tell us how much exposure you suggest someone should have to international funds, telling you quickly because we have really limited time on the show now.
Currently, I have around 22% of my personal portfolio in global stocks. It is a function of the cycle of global stocks, their valuations. So 1 year back, when India was very expensive, I have used that period to increase global exposure. But at large, 25 to 30% is what I would like to keep in my portfolio. But it is an individual case to case.
We take that point. 25 to 30% is what you have, but of course, everyone's risks and goals and idea about investing is very different. But Aashish and Kalpen, such a pleasure to have both of you on the show today. It was a new topic and definitely very useful for our viewers as well, especially so much interest coming into GIFT City. There have been new announcements that came by from the Finance Minister today as well. So we'll keep discussing that, but thanks a lot for your time today.
Thank you.
Okay, all right. That's all we have on the show today, but you stay tuned for Closing Bell to take you through the last hour of trade.